now we take that extra $1,500 that you're saving per month, you apply it toward the mortgage. Now you have no debt and you're paying your mortgage off in 15 years. I think the reason you should buy now is you can easily refinance later. That was a good idea.
Yeah.
We made a ton of money back then.
Yeah.
Don't hesitate to buy. Buy now. I'll refinance you later. You think about this.
You know how many real estate agents there are now?
How many?
1.45 million. So we have, 25% more agents.
I think that most agents also don't have a good value proposition. Ramey, EXP.
It's the Mark Ramey Podcast, and I'm here today with Bruce Woodburn. And I want to remind everybody that the intention of this podcast is to shine a light on people who serve the Orlando community at a high level in various service industries, so that our listeners can have access to great information that will help them make great decisions around who can support and serve them with their service needs. So today I have a guest. His name is Bruce Woodburn. He's with CrossCountry Mortgage. Bruce has been in the mortgage industry for, I know, over 30 years.
Yes, I have.
Yep. He started when he was like 5 years old.
That's right.
And
I was carving applications out on a stone.
a stone tablet?
Yes.
Kind of like the Flintstones.
That's right.
That's fun. I love that.
Moses and I.
Uh-huh. You and Moses. Okay. All right. Well, today we're going to talk with Bruce Woodburn, the branch manager of CrossCountry Mortgage, right here in the middle of Orlando.
That's right.
And so, Bruce, tell me a little bit about your story. How did you come into the mortgage market?
Oh, that's interesting. I came into the mortgage market really by accident. I started working for a bank out of California, and it was never something that I intended on getting into. But once I got into lending, it really just became part of me, and I really felt great about helping people. I had never really had a job other than other sales jobs that allowed me the opportunity to really help people do things that they wanted to do. And I can remember closing my first mortgage transaction and seeing the look on my client's face when they had bought their first home. It's just, it's an unbelievable experience. I don't think we do things that contribute to like what a doctor would do to save a life, but we do things that people can truly enjoy and see satisfaction of. And the thing that I like about it is over the years, I've helped a lot of people create wealth in real estate. And now I'm not only helping their children, but even in some cases, their grandchildren with their first homes.
So you definitely started when you were 5 years old.
Yeah, I did.
Yeah, okay,
Yeah.
I get that. That's exciting. And I wrote down, felt great about helping people. So let's talk about that. In the mortgage industry, I know there's multiple ways that you can help people. So what types of mortgages do you offer?
There's not really any type of mortgage that I don't offer when it comes to residential needs, and I even do some commercial loans, but for the most part, I'm a residential lender. We do all your traditional financing, your conventional, your FHA, VA, USDA, but we have alternative programs. We do construction to perm loans. We do one-time construction perm. We do renovation loans. I do home equity lines of credit. I do investor loans, bank statement loans. So, self-employed people don't have to bring their tax returns to the table. We do DSCR, debt service coverage ratio loans for investors, very popular right now. For investors that may not show the income on their tax returns, but they have got money to put down, they've got decent credit, and they still want to buy investment properties. We're doing refinances, debt consolidation. On average, CrossCountry, which one in every 44 loans in the United States is a CrossCountry mortgage right now.
Oh, wow.
That's huge. We're number one retail. There's only two institutions that do more business than we do, and they're both more on the wholesale level, like a Rocket Mortgage and United Wholesale Mortgage, big brokerage firm. And then CrossCountry Mortgage is the first and the biggest retail lender in the country.
So you got a real grab on the market share for sure. You guys are doing
Absolutely.
some large business. When it comes to residential mortgages, which are the mortgages that you're finding that you're doing the most of?
Well, that can change in different markets, but right now, purchase money is still our number one, and I would say 60% of the business, if not a little bit more, would be purchase money business. But believe it or not, we're still doing refinances in this market.
Wow, really?
Yeah. So you wouldn't think so, because you would think
Rates as high
everybody.
as they are?
You would think interest rates, when they were in the 3s and 4s, everybody refinanced, and they did. But unfortunately, I think people got a little crazy with spending during COVID, and then realized that they created a habit for themselves and got in a little bit deeper. And I'm even concerned, Mark, with after the holidays, if spending becomes just a little bit too erratic and compulsive, that people may get themselves into further debt, and then they're forced to give up that 3.5% fixed rate mortgage to refinance. However, there are benefits to it. So, for instance,
why would I want to do a refinance right now with rates so high?
Well, there's a couple of reasons. I'm doing several for people that want to buy investment properties and they've got a ton of equity in their home, but primarily for debt consolidation. So let's just say you have a mortgage payment right now of $1,500 a month, and you have $2,000 a month in credit card debt and $1,000 a month in car loans.
Wow.
But you're sitting on $150,000 in equity in your property. Well, I consolidate all that debt, and maybe your mortgage payment goes from $1,500 to even $3,000, but we're saving $1,500 to $2,000 a month. Now, that helps the family get by. Now we take that extra $1,500 that you're saving per month, you apply it toward the mortgage, now you have no debt, and you're paying your mortgage off in 15 years. That makes sense.
Yeah.
So now we're working toward becoming debt-free. Now, some people may say, well, why don't we just wait for interest rates to drop more before we do that? Do it now as a cash-out refinance later when rates drop as a no cash-out refinance. Why a no cash-out refinance? Your interest rates are even better when you don't take any cash out. So as long as you wait a period of time, usually there's a seasoning of 6 months to a year, which we are expecting that in 1 year we should see rates hopefully back in the 5s.
Oh, wow.
And we're already seeing interest rates. We're seeing interest rates, we're locking in the mid-6s right now.
Let's talk about that. So some people believe that the Fed will lower rates. I mean, I've heard this. I want your take on this. As much as 6 times in 2024.
Well, that has
What are your
not been
thoughts?
said. First of all, what has been said by Jerome Powell is that we could see as much as 3 rate cuts in 2024. Now, I have the numbers of the probability of the next Fed meeting, which is on January 31st. There is an 89.7% chance that there will be no easing. There's only a 10.3% chance that they're going to ease it in January. And I don't think they should ease it in January. I think we need to wait and see. See, they didn't ease rates on the last Fed cut, but yet we saw a rate reduction, right?
Yeah.
Rates came down almost a full point.
Yeah.
That was positive. We just need the market to catch up with itself. So they created a knee-jerk reaction when they raised rates too quickly, too fast, but they were getting pressure from central banks. They were getting pressure because of inflation. Jerome Powell is not even an economist. He's an attorney. He was doing the best he could with what he had, but I think he made a lot of mistakes in that. And I think that now he's realizing that just don't rush things. Let it take its course a little bit, and I think that we'll start to see the benefits. Do I think we'll have some rate cuts ahead? Yes, I think that there is some easing, quantum easing that the Fed will do. However, I don't think it needs to happen fast, and I don't think people should wait for that to happen.
think that's kind of what we were talking about when we decided to make this live stream. And we said, don't buy a house, right?
Right.
We were talking about that. And so what are your thoughts on that?
Well, the reason I don't think people should wait, and oftentimes people look at me and they'll say, well, you don't think they should wait because you want some business right now. It has nothing to do with that. I don't think you should wait because let's just put this in perspective. Do we all believe in supply and demand? You believe that if there's an abundance of supply and low demand, then prices drop. But if there's a lack of supply and high demand, prices go up. Does that make sense?
It does until the last 2 years. I
Well,
mean, if you look at what real estate's done in the last 2 years, realistically, we've seen prices go up 15%, while inventory rose 2 times in inventory.
You're right. So we have had the last 2 years have never happened before. We had a lack of inventory and a lack of enthusiasm to buy. But the reason the lack of enthusiasm was there to buy is people were spoiled with low rates, and they all of a sudden said, "Oh, I'm not going to buy because rates are 7.5% or 8%." I mean, we were pushing 8% not but 2.5 months ago, and now we're in the mid sixes with rates, so they're improving quite a bit. But the same thing happened with sellers. Sellers got very greedy during COVID, and they were getting over ask price.
Oh, yeah.
Now they had to get down to reality. Even though we're still appreciating, they had to get down to reality, and some of them, it's not sunk in their brain. They're still trying to get 2021 prices in 2023. So the same thing happened with sellers as it did with buyers. I think the reason you should buy now is you can easily refinance later. But if you wait for interest rates to drop, let's just say that 10 people want to buy a home right now, but only 2 of them are willing to jump into the market because interest rates are higher. What's going to happen when interest rates have a 5 in front of the number and the rest of those 10 jump into the market? What are we going to see with inventory then?
It's going to diminish even more. And
Right.
right now, currently, normal markets have 6 months inventory. Right now, we've got 4 months supply. We just eked over 4 months.
Right.
We're starting to see where sellers are giving concessions.
Sure they are.
They're giving more opportunities because we don't have the multiple offer situation that we did just 2 years ago or even a year ago.
So that is my point. If you're a veteran and you want to go no money down, if you're FHA with 3.5% down, if you're a first-time home buyer putting 3% down on a conventional loan or 5% down on a loan, or even if you have 10% but you need a little help from the seller, maybe you want a new roof, maybe you want new plumbing, maybe you have an electrical box that needs to be fixed, maybe there's some deferred maintenance on the house, maybe you need a rate buy down, we can talk about that as well. Sellers are motivated to help you right now. But when the rest of those 10 people jump in the market, there's no need for them to do that anymore. They don't have to. There's too many buyers and not enough inventory.
Well, and sellers are feeling that because, if you look at the numbers that just came out for November, which is the most recent numbers that we have, just 2 years ago, days on market for a seller were like 26 days, and now they're at 48 days. So sellers are feeling that crunch when they're not experiencing what they were just a year or 2 years ago. And we're not at 6 months supply yet, which is normal. We're still below that. It's still driving prices up, and yet sellers that really have to do something, they've got an ear for a buyer's offer at this point.
Well, you remember back in 2007, 8, all the way through actually 13, we had 18 months worth of inventory. So there was a lot of inventory back then.
Yeah.
But I want to put things in perspective. Don't you wish you would have bought a lot of property back then?
Oh, yeah.
I mean, would we have made money?
Yeah.
So do you know who was buying property during that time period?
Corporations.
Hedge funds.
Yeah.
So what happened? Right now we have a dilemma because hedge funds are wanting to occupy and purchase 44% of the market, right?
Yeah.
That's going to cause a problem. You know how the problem became a problem? When we needed hedge funds that weren't buying residential real estate, They bailed us out. They're the ones that bought property.
And brought the inventory back to normal supply.
Yes, they did. But now they got in a habit and they went, ooh, that was a good idea.
Yeah.
We made a ton of money back then.
Yeah.
Now the monster has been created,
Oh, yeah.
and now it can become an issue. So right now, I was reading an article that there is a bill that's trying to be passed to eliminate and prohibit hedge funds from buying residential property.
Yeah. They did something similar to that in Canada.
Yeah. Well, I don't know if it would ever pass here because I think we're more capitalistic here, and I think it would be difficult to say you just can't. But even on a government owned loan, REO, for let's just say FHA owns a property that they foreclosed on, bank-owned property, it prohibits an investor from buying that property for 30 days. It's open to an owner-occupant first, and I think that's reasonable, right? But I don't think you can say hedge funds, you just can't buy residential.
So let's say that someone comes into this market because they have to. They're getting a job transfer or they need to do something. How does someone know what the best type of mortgage is for them? I mean, you mentioned a whole lot, and you and I know what those are. But for people that may be beginning in this industry or looking at homes, what's best? FHA? Is it? You said 3 different types, like conventional. You said what was the other one?
So your typical first-time home buyer, for somebody that has minimal amount to put down, would be an FHA loan at 3.5% down. It allows for flexible credit. CrossCountry doesn't have any overlays, so we don't even have any limitations on credit scores for that. FHA requires that if your credit score is under 580, you have to put down 10%. But if it's over 580, you can get away with 3.5% down. Probably your most popular first-time home buyer program because it's flexible. Flexible with debt ratio, flexible with credit scores. And then your next program would be a conventional 3% down. You have a little better credit, a little lower debt ratios. You can get into a first-time home buyer program with 3% down. And if your income is lower than 80% of the median income, you can even get discounted interest rates and PMI. So that's a popular program.
So I wrote this down. I wrote down you could do FHA at 3.5%, you could do conventional at 3% down. What's the difference? What's important about the difference in those, and why would I want one versus the other?
Well, typically if your credit scores are a little bit better, I'm going to lead you in a direction of a conventional loan. If your credit scores are lower or your debt ratio is too high, I would go in the direction of an FHA loan for the flexibility. The reason but I would never tell a buyer, no, let's fix your credit and wait 3 months before you can buy to get a conventional loan over an FHA loan. It's not that significant. However, on an FHA loan, your mortgage insurance does not go away.
Okay.
Where on a conventional loan, it's going to go away after you've hit 78% loan to value.
And to clarify, mortgage insurance is?
It's a way that the lender protects themselves from loss. If you defaulted on your loan, the lender is going to be compensated by this insurance policy for a portion of their loss. Usually it's around 25 to 35%.
Okay, how does that affect me as a buyer?
Well, I love PMI. It's funny because when I'm teaching real estate
PMI
classes,
is?
Private mortgage insurance. And for FHA, it's called mortgage insurance premium.
Okay.
VA, it's called a funding fee.
Okay.
USDA, it's called a guarantee fee. It's all the same thing.
Okay.
It protects the investor in case you defaulted. So when I'm teaching classes, Mark, I'll oftentimes say, hey, raise your hand if you love PMI. And nobody raises their hand. And I said, oh, so let me ask you a question. You need a market where everybody puts down 20% or more. No. Well, only 16% of buyers can put down more than 20% or more.
Wow.
That's not a lot.
Yeah.
So you better eliminate a lot of people out of the market. So I love PMI. And the great thing about PMI is it gets you into the house. If you're renting, it's 100% interest rate.
Yep.
it gets you into the house. My son Chase bought a house 2 years ago. 3% down program. Struggled. Wasn't making a lot of money. Under $50,000 a year. Really struggled to get qualified for that house. But he did it. Got a little seller concessions, just like we're talking about now. He now has $175,000 in equity in that property. Do you think the PMI bothers him?
No.
Doesn't bother him at all.
No.
So don't step over $1 to pick up a penny. Just take the benefit. And when rates drop, he'll refi it.
Yep.
And now he's got the equity to get rid of the PMI.
Sound advice. So, question for you, I guess, when it comes to a buyer making that initial decision, what steps do they need to take?
To be able to buy?
Yeah.
Well, the first thing we want to do is look at your income, your credit, and your assets. So the two primary challenges that people have is not their income. It's usually their credit or they don't have enough cash to close. So we'll analyze their credit. If there's a few things that we can fix or adjust in-house, we'll do that. Most of the time, we do. Because I'll pull somebody's credit up and go, hey, you got a 620. And they'll go, well, do we not qualify? Oh, no, you qualify. But I can get you an 1/8 of a point better in interest rate if I can get you to a 640. And if you pay this debt off or do this or that, then we can get you up, and that gives you a little bit lower payment.
So what you're doing is you're spelling out options for a client. So like I had someone call me the other day, and she was referred to me by one of my previous clients that had bought with us. And she said, we're moving to Mobile, Alabama. And she said it's going to probably be about 6 to 8 months before we'll consider that move. And I shared with her, I said, it'd probably be a good idea for you to speak to a lender now. And she said, well, why? She said, we're not doing that for 6 to 8 months. And what would you say to that?
I would say that that's the perfect advice, at least 6 months before. Even if you think your credit is great, it might be able to be a little better. And a little bit better might just take a couple of small moves. And I don't recommend you do it yourself. Typically when I see people analyze their credit, I had a client the other day, Mark. They thought they could improve their credit and they paid off all their debt. Now that would make sense to the average person listening out there. What do you mean? How does that affect me? Now you have no debt, so the credit reports aren't getting anything reported to them because there's nothing to report. So their scores drop by 50 points. It costs them money instead of made them money. I don't want you to do that. We run analyzers for everyone that says, if you do this, your score should go to this within this time frame.
Yeah.
So
there's strategy.
There's absolutely strategies. And one card you pay off might improve your score, and another card you pay off, it hurts your score.
Yeah.
So we run those analyzers for you.
How long does it take to get a pre-approval?
Well, provided you have all the documents ready to go. So in other words, if you're...
What should I be bringing into you? What does that look
like if you're not self-employed, we want your W-2s for the last 2 years. We want your pay stubs for the last 30 days. We're going to review your credit report, and then I want to see your bank statements, including 401ks, checking, savings accounts, any asset that you have, so we know what you've got to work with. So those are your primary things. And then, of course, photo ID.
Yep.
And from there, we can generally pre-approve you within 15, 20 minutes once we've received the documents. We don't write pre-approvals till we see documents. That's really a pre-qualification. And I don't know, but I don't think you're going out showing property with a pre-qualification.
No. And so I wrote down 15 to 20 minutes. What I want to be clear on for everybody that's out there is what he just said. 15 to 20 minutes so that you can gain insight into if this is possible or if it's not. And then we also talked about just a moment ago, if it's not possible, you're going to understand why. So, for example, the lady that I was speaking about that wants to move to Mobile, Alabama in 8 months, if she knows this information now, and let's say it takes a month or two for her to resolve some things, she knows it now. She doesn't know when she has to move into a house 8 months from now, and then it becomes pressure, and then maybe she's got to step into a lease or live with relatives, and that's when it becomes messy.
Absolutely.
So 15 to 20 minutes.
Absolutely.
Simple, right?
Yep.
And then you've got all the.
And we don't
information.
charge anything for that analysis. If your credit is just literally trashed, and we look at it, and we're like, yeah, we can't do anything for you. I'm going to put you in credit repair. I have a credit repair program that I actually reimburse the customer for the cost of the credit repair when they come back to close.
Oh, nice.
So it really ultimately doesn't cost them any money, or very little money, and now you have hope. But we want to set the game plan. We want to give them hope. Everybody can buy. I don't care if you had a foreclosure yesterday. I will position you to become a buyer again.
So you'll position them for success. Here's a question. You brought up a good point earlier. You said, you could wait. And then the question that came to my mind is, if we still have decent demand right now.
Yes.
And I would even go so far as to say that it's strong demand, because we still have below 6 months supply of inventory. What if, we have that demand and then mortgage rates come down? Then what happens? What should we be prepared for?
Well, I think the demand is going to get higher, and the sellers are going to become less motivated to negotiate.
Okay.
Right? So when you have a lack of inventory and higher demand, we saw that during COVID. And you know what? There were some opportunities, and I don't think people. I had a client paid $40,000 over ask price. I had another client paid $150,000 over appraised value to buy a home during that time frame, and I don't think they made a bad decision. But you can't do that as a veteran. You can't do that as a first-time home buyer. It's not possible. And I'm afraid for first-time home buyers. I'm afraid for the people that need down payment assistance, that if they don't act now, they're not going to have that opportunity when rates drop, because everybody's waiting for the same thing. And as soon as that gate opens up, they're all going to rush in, and sellers are back in control.
Yeah.
I'm holding off on selling any properties. I think we're going to see an explosion. Matter of fact, I was listening to Barbara Cochran. You know who she is,
Yeah.
right? Shark Tank,
Yeah.
real estate mogul, multi-millionaire. She thinks that when rates hit the fives, that we're going to see a 15% increase in prices.
Wouldn't surprise me. I guess with that in mind, the question that I would have for you is, any programs that you wish more buyers were aware of currently that perhaps could help them step into the market at this
Absolutely. If you are, and I speak mostly to first-time home buyers, because if you already own a home, you have tons of equity to get a conventional loan and put your 10, 20, 30% down or more. But for the average person that's just trying to get in the market, there's still down payment assistance programs out there. I just got a client $40,000 for down payment assistance, City Orlando, $30,000 for Orange County. We've got them in Tampa for down payment assistance. Hometown Heroes, as of today, still has $10 million left for Hometown Heroes.
Wow.
And you don't have to be a hero. You can be your mom's hero, but you don't have to be a firefighter, nurse, So there's programs available for that right now to help you get into a home. There's no reason, even if your rent is slightly lower than the mortgage payment would be, don't hesitate to buy. Buy now. I'll refinance you later. You think about this. If you're at 7.5%, and they're lower than that, but 7.5%, rates drop by 2% on a $450 house. That's a $550 a month decrease in your payment.
And the thing that we know, and I've got the proof right here, it all came out just in November. In the last 2 years, since 2021, as interest rates continued to rise, prices did not fall.
No, they didn't.
We saw prices go up 15%. So it's, can you get in now and get a foothold in a market before it goes up more, and then when the rates do come down drastically more,
Just refi.
Yeah.
Just refi. Now, and it's funny because you and I heard after March of 2022 how many people were saying, I'm going to wait for the market to crash. I think real estate's going to crash. Did that happen?
No, and here's why. Remember 2008?
Yes.
It was very different from now. There was some lending practices happening then that really shouldn't have been happening.
That's
to an
what caused
extreme,
it.
to an extreme.
Yes.
So there was more money in the market then than there should have been. We saw values going up double digits 2 years in a row, and then
I mean, leading up to it.
exactly.
Yes.
And then when people figured out what actually was happening, that people were just buying homes because they had a pulse, they got a mortgage.
Right.
Then the you know what hit the fan, and that's when things.
Well, and they
tumbled
had no
just as
skin in the
quickly.
game.
Correct.
So back then,
And that hasn't happened in the last.
no, it hasn't happened.
No.
There's prudent underwriting, we
Yeah.
call it right now. But back then, you were getting 100% financing without verifying income, so there was no
That's
equity.
a problem.
But the people that have bought, they're sitting on a ton of equity.
Yep.
So we're not going to see the foreclosure rates that happened then.
Nope.
I mean, because people are sitting on. I mean, you could dump your home right now if you had to avoid foreclosure, even if you lost your job and you had no income.
And you get significant equity.
And you
sure.
probably would still walk away with some money in your pocket. So I don't see that happening right now. I don't see a lot of foreclosures on the market. I certainly don't see values decreasing. As a matter of fact, I think as soon as we see these rates drop into the fives, you're going to see an explosion of value.
So here's a question. I'm going to take a sidebar here for a second because, being in this industry, we have a lot of counterparts that I work with every day. I work with other agents on the other side of a transaction, and they're hurting.
They are.
It's painful.
It's been very painful.
And fortunately, I'll say that, my business last year, or this last year, 2023, has mirrored 2022. I believe that for an agent to be successful in this industry, that you have to have a niche where you have access to sellers that are truly motivated. Because if you have access to sellers that are truly motivated, guess what? You can attract buyers because they can make deals.
Absolutely. And you can't have a motivated seller without a motivated buyer.
So here's a question that I have for you.
Let's hear it.
Because I really care for my counterparts in this industry. You service a lot of agents with sales down 30%.
I think it's even more than that.
Yeah, in the last 12 months. I guess, what did you see successful agents doing?
That's really interesting because there is a segment of the market that is still doing exceptionally well. And I think the good realtors did better than even the good lenders. Because when rates went up, the refi market died off and people weren't buying either. So lenders got hit harder than realtors did in this market. The lending industry was really hit hard. But I think that for both of us, in my industry and in your industry, so if you're listening out there and you're a real estate agent, why did your business suffer? Because you weren't working the business the way the business should be worked. Things fell in our lap for 2 to 3 years before that. You made more money than you've ever made, and it was the easiest money that you ever made. And you got used to thinking that that's the way this business worked. And it didn't work that way. You and I have been working together for more than 15 years. We've been in this business when the business wasn't as like it was during COVID. It was falling in our lap.
2009.
Right.
Yeah.
It was difficult. There were challenges. We were working. We were making phone calls. We were seeing people. We were helping business owners. You were calling on for sale by owners and doing open houses
Short
and
sales.
everything. You were doing everything you could to drum up business and help people. Where a lot of the real estate agents, they became polarized with it. And lenders too. They became polarized. They're like, oh my God, I don't know what to do. Well, I work the market every single day. Every single day, I make phone calls. I'm helping people. I'm educating my clients. I'm educating real estate agents. And I'm also giving them tools on how to go out and find business. How many people do you know that call on financial planners and life insurance agents and divorce attorneys and will and trust attorneys and estate planners? And these are the people that find people that have to sell a home. And if you have to sell a home, you're going to find a buyer.
Yep.
And if you position yourself, and I think the problem is a lot of the people out there that are in our industry did not position themselves to be where the business was still happening.
Oh yeah. And what's interesting is if you look at what's happened in the business in the last year, 2022 there were 6 million transactions in this country.
Right.
It's projected that 2023 is going to finalize at about 4.2 million transactions. We haven't seen 4 million transactions. This is a reality check.
Yeah,
Since
big reality
2012. 2012, we were in the thick of the sky was falling in 2012. I don't know if you remember that. And what's interesting is in 2012, there were maybe 990,000 real estate agents. You know how many real estate agents there are now?
How many?
Almost 1.5 million, 1.45 million. So we have, 25% more agents than we had then with, 33%.
Less business.
Yeah, with less business. And, as we move from a speed-based business where everybody is buying and everybody is selling to a business like we've seen in 2023.
Service level business.
What has to happen is what you just described, Bruce, is our skills have to go up. If we don't increase our skills, we're going to be part of that proverbial tree that's going to get shaken. And if we're not careful about increasing our skills so that we can serve this industry and serve clients at a higher level, we'll have problems.
So when you say skills, I want to discuss the skills, but is that more work?
Of course it is.
It is more work.
Yeah.
It's absolutely more work. So you're not sitting around painting your toenails at 7 o'clock in the morning, right? You are at work.
Yeah.
You treat this like it is, like a business. And I think a lot of people got so scared that they just decided there was nothing they could do about it. And there is always something you can do about it.
Yeah.
There's always something you can do about it. Yes, it's a lot of hard work. I was just telling Mark, I'm working 7 days a week.
Yeah.
I'm working 7 days a week. So are you working 7 days a week? Are you putting in 8 to 10 hours a day? Because if you are, you're going to have a successful business. Now, I don't want to work 10 hours a day, 7 days a week. But when times get tough, the tough get busy.
Yeah.
And that's what you have to do right now. And that's why my business isn't as good as it was during COVID, but my business is thriving right now.
Yeah.
And we're going to be just fine. I'm excited about the future. I'm excited about 2024. I'm even excited about 2025. But I don't think when the times get tough and you stop working. I have meetings every week with real estate agents. What are you doing with your birthday program? You calling people on your birthday? How about your home anniversary? How about their anniversary? Are you doing podcasts?
Are you role playing?
Right.
Every day, minimally 5 days a week, twice a day, so that you know how to bring people to a smooth landing and guide them with your dialogue, because it's scary for our clients.
Absolutely. And the clients are scared too.
Yeah.
So if we're going to be true professionals, we have to be there to help them get through this and see where the opportunities are. Here's the thing that I find is the biggest challenge. I see major opportunities in buying homes right now. Mm-hmm. I just closed on 2 homes in Daytona. I'm buying real estate in this market because I believe that give it 5 years, we are going to explode in value.
Yeah.
And what's going to happen is people are going to sit on the sidelines, wait for the rates to drop, and all they're going to do is pay more for the house.
And we're not going to see what happened in 2008 through 2014,
No.
where the sky literally did fall. It's not going to happen.
No, it's not.
Yeah.
No, it's not.
So, all right. What about, I guess, what should the agents, perhaps who are struggling, what should they be looking at doing?
So, how many calls are you making a day? Do you have your database in line? So, like for instance, as a real estate agent, you could be calling for sale by owners. You could be calling expired listings. January 1st is coming around.
Yep.
You and I both know that there's a lot of expireds
for that,
happen on that. And people didn't have success with the agent that they chose. I think that most agents also don't have a good value proposition. And I ask them, when I interview them, what's your value proposition? And they don't know what their value proposition is. You have to have a good value proposition when you are in any type of a sales job. Why would I choose you over that person over there? If you don't know what that value proposition is, that's the first place to start.
Well, and you know where all these skills come from. It's who are you in proximity to?
Right.
I mean, in all reality, are you in proximity with an agent that perhaps is built for this? That maybe they went through 2008, or a lender that is built for this, that they went through 2008 through 2014 where the sky was falling. And if you're in proximity to the people that have the skills and they can lift you up through this time, don't you think it's going to make it easier for you to be successful in this industry?
Well, I think that's one of your big talents too, Mark, because not only do you do it, not only have you already made the mistakes, not only have you fought through the tough times. We make them every day, but we fought through the tough times, and now we have the skills to help bring up our counterparts, our other lenders, other real estate agents. So, but you have to be willing and be able to surrender to new ideas or things that you need to do to become accountable for your actions. And I think if you're open to that, you could, you're hiring people right now.
Yeah.
Right? You're hiring people right now. Do they get training with you?
Oh, absolutely.
Right? And do you hold them accountable for what they do?
Oh, absolutely.
So if you are a lazy real estate agent, that's not a candidate for you. But if you are wanting to gain skills and learn do you get people to do things that you don't do yourself?
The interesting thing about that is I've heard this said recently. The lazy mind just thinks if I just do more work. And it's not always just doing more work.
No, it's not.
It's what are we doing and how can we do things in a smart way to prepare for the amazing market that is coming our way.
Absolutely.
And take advantage. So, yeah, it's rich.
Yeah. Well, and so my point is that if you're interested in becoming a more powerful realtor, if you're over the struggle and you don't want to struggle with this anymore and you want to gain the skills that it takes to be successful, because you look at that as a good real estate agent, you make more money than a doctor or a lawyer, and you're not paying malpractice insurance. Mm-hmm. You look at the amount of commissions that you can make on a $400,000, $500,000 to $600,000 transaction. It's over the top, and all you have to do is sell 4 to 6 homes a month. You sell 4 to 6 homes a month, you're making $600,000-$700,000 a year in many cases, and pay no malpractice insurance. Why don't you align yourself with somebody like Mark that can teach you those skills so that you don't have to continue to suffer? And when business becomes great and easier again, you have the systems in place to be able to sustain yourself and grow your own teams. Because you don't always want to be a junior on somebody's team. You want somebody that's going to give you the tools to be able to do it on your own and build your own team, and then have people working under you and help other people start teams. That's what this guy's all about, right?
You're kind, Bruce. Thank you kindly. And on the other side of that is, if you've been watching this and you've been on the edge of, do I step into this market? This is the person that you want to speak to, because I was 20 years old when my father said to me, go get your bank book. And I was like, why? I was living at home at the time. And he said, just go get your bank book. And you know what a bank book is,
yes.
Right? We do online banking these days, but we used to have a book that went like this. It was about as big as this. And he said, I went and got my bank book, and he looked at the balance. He said, you're buying a house. I said, I can't do that. And sometimes you just need that person like Bruce that's in your corner that can look at the overall perspective and situation and say, look, this is what it looks like. And sometimes the fear of the unknown is what keeps us from stepping through to awesome.
It's almost always the fear of the unknown.
That's it.
It's usually fear that keeps us from moving forward. But I'm going to tell you something. A little bit of fear doesn't hurt you. You just got to step out there. Don't be afraid. And follow somebody that's already got the track record. I'm even hiring loan officers right now. Even though the market's still down, I'm looking for loan officers. I need them to help my builders. I'd love some. And when I'm looking for loan officers, I typically want people that have 2 years experience or more. And I love it if they were bilingual. But I am hiring people right now to service my clients and help me build the business. I'll help you build your own branch. You want your own branch? You can do that as well, and I can help you with that.
It's exciting, Bruce. And I want to thank you. I don't have a studio as cool as this. This is pretty cool, right? And thanks for inviting me, because normally my podcast just happens from my home office, which isn't as lavish as this. So if someone had questions about mortgage or wanted to get pre-approved, how could they get in touch with you?
First of all, there's two things. We are very hands-on, so you can call me. My office number is 407-869-8830. My cell phone number is 407-230-6599. I take calls. I still originate transactions. Or if you are busy during the day and you just want to do it on your free time, go to webringyouhome.com. That's webringyouhome.com. Apply there. If you're a real estate agent and you want to talk to me about helping you and your clients grow their business, I'm always open for that as well. But we are very hands-on. We still do personal appointments. Can you believe that?
Yep.
I still have somebody at the front desk
Yep.
that answers phone calls. And we will do Zoom appointments, and we do a lot of online business. But we want our clients to get what you want, not what I want.
Thanks, Bruce. I appreciate it.